Kalshi confirms 1BR raise at 22B valuation as prediction markets surge. Kalshi confirmed today that it has closed a $1 billion funding round at a $22 billion valuation, ending weeks of speculation after earlier reports flagged the deal in the works. The CFTC-regulated prediction market disclosed the close in a public statement covered by CoinDesk. The valuation roughly doubles the level Kalshi commanded in its previous round and lands the company among the highest-valued private trading venues in the sector. As of May 7, 2026, BTC sits at $8,248, down 1.8% on the day, with the broader market in a neutral 48 reading on the Fear and Greed Index. Risk capital is still flowing into prediction markets, even as spot crypto chops sideways. A doubling in months, Kalshi was last marked at roughly half this valuation in earlier private rounds. The new $22 billion price puts the company in a similar tier to the largest crypto exchanges by private valuation and signals that institutional investors view event contracts as a durable category, not a 2024 election cycle artifact. The raise comes as monthly prediction market volume across the sector has climbed from $1.2 billion at the start of 2025 to more than $20 billion today, a roughly 17-fold increase that we covered in our piece on Polymarket monthly volume. Kalshi, unlike Polymarket, operates inside the CFTC regulatory perimeter and lists contracts on U.S.-domiciled rails. Regulatory tailwind, not just hype. The funding lands during an unusually busy stretch for U.S. event contract regulation. The CFTC drew more than 1,500 public comments on its prediction market rulemaking earlier this year, a record level of engagement that reflects how contested the category has become. Sportsbooks, state attorneys general, and trading firms have all weighed in on the boundaries between event contracts, sports betting, and traditional derivatives. Kalshi has spent the past 18 months winning legal battles to list a wider set of contracts, including political and macroeconomic events, that earlier reviewers had blocked. Each successful expansion has widened the addressable contract universe. A $22 billion valuation implies investors expect that universe to keep widening rather than contract. Likely uses for the war chest. A $1 billion war chest is large for a derivatives venue. Typical uses include marketing and user acquisition as the company pushes from political traders into mainstream sports and macro audiences. Regulatory legal, spend across federal and state jurisdictions, where multiple suits are still active liquidity provisioning, since deeper books on long-tail contracts require dedicated capital international expansion, particularly in markets where event contracts can operate under existing financial licenses rather than gambling regimes. The size of the raise also suggests Kalshi is not optimizing for a near-term IPO. With this much private capital, the company can stay private through several more product cycles before facing public market disclosure pressure. Implications for the crypto-adjacent stack prediction markets have become a frequent landing spot for crypto-native traders, particularly those displaced from offshore venues or looking for hedges that traditional derivatives do not offer. Polymarket runs on Polygon and settles in USDC. Kalshi runs on traditional fiat rails and is custodied through U.S. banking partners. The two formats compete for similar trader attention, but expose users to very different risk profiles. For users routing capital between crypto venues and Kalshi, the relevant friction is the on and off ramp. How fast stablecoin balances can be turned into fiat that Kalshi accepts and back. The cards that handle this stack reasonably are the ones with stablecoin spending support and low foreign exchange markup for non-US users, since Kalshi accounts are USD denominated. The bigger picture, Kalshi's funding round arrives in the same week that several other venues, including DTCC and Securitize, advance their tokenized securities timelines. The thread connecting them is the same. Regulated U.S. infrastructure for non-traditional financial instruments is being capitalized at scale, with billions chasing a small number of compliant venues. Whether prediction markets become a true mainstream financial category or settle into a niche derivatives product is still unsettled. A $22 billion valuation is a strong claim that the former is more likely than the latter.